Today I am going to discuss under Financial Accounting and Reporting Fundamentals, September 2016. September 2016, Executive Paper, Accounting. So let's move on to the question number 3. Net assets of a sole proprietorship business as at 31st December, March 2015 and 31st March 2016 were 4,280,000 and 6,800,000 respectively. So you are given the net assets on March 2015 and March 2016. During the year, the business purchased a machine for 1,240,000. The proprietor's drawings during the year amounted to 240,000. Compute the profit earned by the business. Profit earned by the business during the year 31st March 2016. So these are very simple questions. What you can do is you can take the opening net assets 31st March 2015. The amount was 4,280,000. So take that amount, 4,280,000. Then from that amount, so whatever the drawings, we need to deduct it from the net assets. Remove drawings, which is 240, this amount, 240, and you need to add the profit. Okay, so profit figure you need to identify. Then your net assets as at 31st March 2016 is given, which is 6,800,000. 6,800,000. So when you simplify this, 4,280,000 minus 240 minus 6,800,000, 2,760,000. So this is the answer for the first part, which is part A. So let's quickly move on to the part B. So this is regarding the bank reconciliation statements. Okay, so we'll discuss this. Let's go through the question. Martin, an accounts assistant at Omega Private Limited, wanted to resign from the company with effect from 1st August 2016. He hurriedly prepared the following statement as at 31st July 2016 to show how the bank statement balance agreed with the cash book balance. So he has prepared the bank reconciliation statement as at 31st July 2016. So bank balance was 3,250,000 and there was deposits, unrealized deposits he added, which is correct, and there were two charges which was not accounted in the cash book, which is LC charges and bank charges he has added. Then there were some unpresented checks he has deducted, and direct deposit from customers, which is not in the cash book, so therefore he has deducted. Dividend from investments directly sent to the bank, so which is also he has deducted, which was not in the cash book. So thereby he has arrived at the cash book prevailing as of 31st July 2016. Okay, but however this was not the correct balance. This balance should be adjusted for these entries. So these entries, LC charges and bank charges, then direct deposits and dividend investment directly sent to the bank were not adjusted in the cash book. Therefore, these figures will have to be adjusted here. Then during the month August 2016, total debits excluding the opening balance. Okay, so excluding the opening balance, whatever the balance we calculate after adjusting this balance will be the opening balance. And total credits in the bank account cash book were 8,250,000 and 9,800,000 respectively. So you are given the total debits and total credits in the bank book, in the cash book of the bank column, and thereby you can identify what will be the closing balance 31st August 2016. Okay, then unrealized deposits and unpresented checks as at 31st August 2016 amounted to rupees 480,000 and 720,000 respectively. Further bank charges amounting to 2,400 had not been taken in the cash book. So this is during August. There was a bank charges that was not considered in the cash book. So what is required? So you are required to calculate the bank balance that should be reflected in the statement of financial position as at 31st August 2016. So which means, so you are required to show the cash book bank balance as of 31st August 2016. So you need to calculate. So prior to that, you need to identify the adjusted cash book balance as of 1st August 2016, because the 1st August 2016 this balance is not the correct balance. Okay, so the accountant has prepared the reconciliation to show the differences between the bank balance prevailing at that time with the cash book balance. So to arrive at the correct cash book balance, these entries which are not recorded will have to be adjusted to arrive at opening balance. Then find out the opening balance after adjusting these two figures. Then identify the cash book balance to be shown in the financial position by taking into account the cash book entries, the debits and credit entries that have to be recorded to arrive at 31st August 2016 balance. Okay, so shall we do that? So first of all, you take the balance before adjustments, cash book balance before adjustment. How much is that? 3,014,250. 3,014,250. 14,250. So to this amount you need to add direct deposits from customers. So the customers have directly deposited in the bank account which was not accounted in the cash book. So therefore you should adjust the cash book for this amount. How much is that? 120,000. So 120,000 direct deposits, 120,000, and you need to take also dividend investment, dividend received from various companies to the bank, 38,500. So dividend 38,500. So this has to be added. How much? 750, 12, 1 remaining, 4, 5, 6, 7, and 1, 3,172,750. From that you should deduct these amounts, LC charges on imports. So this you will come to know when you receive the bank statement. How much is that? 42,500. So LC charges are not adjusted in the cash book, so that has to be adjusted. 42,500 has to be adjusted. And also there is a bank charges of 250. That also you will come to know when you receive the bank statement. So what should be the balance now? 3,172,750 minus 42,500 minus 250. So that will be 3,130,000. So this is the adjusted cash book balance as of 1st August 2015. Is it 2015 or 2016? Sorry, this should be 2016. Adjusted cash book balance. Now we found out the opening balance 1st August 2016 because the figure given was without cash book adjustments, these two adjustments. So now we have adjusted, we found out the correct adjusted cash book balance should be 3,130,000. So now to that amount, whatever the cash book, the bank account cash book entries, the debits and the credits will have to be adjusted and then find out the cash book balance as of 31st August 2016. So let's quickly do that. So adjusted cash book balance 3,130,000. So during the year, total debits how much? 8,250,000. 8,250,000 minus total credits in the cash book, the bank column of the cash book, 9,800,000. So 9,800,000. What are the other adjustments that you need to make in order to find out this balance, 31st August 2016 balance? You need to take the bank charges. Okay, So these unrealized deposits and unpresented checks are not relevant for the cash book balance, but however this will be relevant to find out the bank balance to prepare the reconciliation. Okay, the second part, in fact, you need to calculate the bank balance as per bank statement. For that, those information are relevant. 2,400 has to be adjusted in the cash book, which is the bank charges. Bank has charged 2,400, so therefore we need to adjust our cash book for that amount. So 3,130,000 plus 8,250,000, then 9,800,000 has to be deducted, and also 2,400 has to be deducted. So it will be 1,577,600. So this should be the bank balance as per cash book as of 31st August 2016. You got it? So that is the answer for the first part. Then calculate the bank balance as per the bank statement. Okay, so you need to prepare a reconciliation to find out the bank balance as per the bank statement. Okay, so let's quickly calculate that. First of all, we will start bank balance as per cash book 1,577,600. This is what we calculated. Then you need to add and minus the remaining entries, which are the unrealized deposits and unpresented checks. So unrealized deposits amount is 480,000. Okay, now this is the way I check the impact, the bank statement, cash book. Okay, unrealized deposits, the cash book balance is more, bank balance is less. This is for unrealized deposits. This is for the unpresented checks. If it is unpresented, we have credited our cash book, but it has not been presented to the bank yet, so therefore bank balance is more. So therefore unrealized deposit, to arrive at the bank statement balance from cash book balance, from cash book to bank, so you need to take this column. So therefore deposit has to be deducted, unrealized deposits has to be deducted, which is 480,000, and unpresented checks has to be, this is unpresented checks, 720,000 has to be added. So what should be the balance now? 720,000 plus minus 480,000. So 1,817,600. This is balance as per bank statement as of 31st August 2016. So this is the answer for the second part. Is that clear? Okay. So that's it for today. I will see you soon with another question. And if you have any questions, please comment below, and I'll see you soon with another video. So thanks for watching. Bye for now.